Hello and welcome back to Nolan Financial Radio. My name is Tara Nolan from Nolan Financial. And if you're just tuning into the show, this is an educational show. So if you can get your pencil and paper to be able to take some notes, be ready to do that. During our show today, if you have a question or we trigger a question in your mind that we haven't answered, please feel free to give Chris and I a call at 719-210-4242. Definitely also check us out online at www.taraenolan.com. While you're there, you can check out what Chris and I look like and see the different services that we offer. And also while you're there, you can click on the radio page. And when you're there, you can go check out past shows because we record these. And there's a lot of educational topics we cover, from Social Security to IRAs to annuities to insurance, all these different kind of topics. So while you're there, you're going to want to subscribe to the program on Apple Podcast or Spotify. And like I said, don't hesitate to reach out to Chris and I if you have a question or just something that you want to know about. We can set up a face-to-face meeting, or we're doing a lot of video meetings now. So it's very fun. We're really enjoying this medium of being able to get out and connect with people. So today we're going to be talking about taxes. But before we jump into that, let me connect with my amazing co-host, Tony Shore. Tony, how are you doing today?
Well, I'm doing good. You mentioned that folks could see what you and Chris look like on the website. And you know what I always say about Chris, he's got the perfect face for radio. So I'm kidding. I like to give Chris a hard time. You know that. So I've been great, but you've been doing a lot of traveling. And I want to hear about that. You've been busy, right?
Well, I love it, Tony, because with COVID going on, a lot of traveling is if you leave the house.
Well, that's true. No, that's true. Yeah, I guess maybe not traveling, but you've been busy. You've been. But
I did actually. So Chris and I were actually able to take a trip to Hawaii, and It was an amazing trip.
You had an actual vacation. I think
we did. We did.
In the years I've worked with you, that may be the first actual trip,
not a working trip, right?
Yeah. Yeah.
So it was amazing, and I think we were very safe because you have to get I think I had like 3 COVID tests within a span of a week. So, but it was a gift to be able to get away. And we were in Hawaii in February, which I've never done before, and that's when the whales are out, and you can walk standing from the beach. You can just see the whales. They're breaching. I mean, they're pretty far out there, but it was pretty amazing.
That's amazing. That's amazing. I've actually never been to Hawaii. I've traveled a lot, so I can't complain. It's not like but my wife and I, neither one of us have ever been to Hawaii. That is a goal of ours to get there. Yeah.
Living in Colorado, there's direct flights from Denver, so you just can't beat.
That's awesome. Yeah.
From here.
Yeah. Yeah. Well, speaking of vacations in Colorado, my whole family and I, we haven't taken a family vacation in a couple of years,
right?
And we're going to Colorado. I actually work with as someone who has an Airbnb, a really nice place. I forget the name of the town. I know you're going to ask me that, but it is unbelievable. It's somewhere up in the mountains. It's about an hour and a half, 2-hour drive from Denver, maybe, but we're flying into Denver. So
nice. When are you going to do that?
June 11th through the 15th.
Oh, perfect time of year. That's going to be an awesome trip.
Yeah. We're excited. You should see the pictures of this place. And he's not charging us. So it's somebody like yourself who I work with, who offered it up. And I was like, yes, we'll take it.
Heck yeah.
Yeah. So we're going to try that out. And of course, I've been to Colorado many times. I've been there to Colorado Springs and love that area. Love the Boulder area. A lot of great food and music and arts in Boulder. And I've been to Denver, of course, for numerous business conferences, et cetera. It seems like there's always some business conference going on in Denver, right?
Yeah, Denver's. It's really nice to be having to live basically in the country, but be so close to a large city. There's a lot of things
that's handy. Well, I'm glad you guys had fun in Hawaii. I haven't seen the pictures yet. Terry, you got to send me. I know you took some pictures, right?
We did take some pictures.
Yeah, I want to see those. You got to text some of those to me. So, and say hey to Chris for me. I want to see Chris in that Speedo on the beach, of course.
Oh gosh, nobody wants to see that, Tony.
All right. Well, today we're talking about taxes, but before everybody turns off the show, we're kind of into tax season. I'm sure some of our listeners have filed, but many of them probably still have yet to file. So I know you wanted to talk about this today, making sure you're ready and about deductions you might be able to get, tax breaks, credits. And so I'm excited about this. What specifically do you want to talk about today?
Well, Tony, I really want to talk about taxes because, part of this show and part of retirement planning is all about getting in that driver's seat and taking some control of your life. And it's really hard with money for most of us because it's not a fun conversation. And doing taxes, I think a lot of people would rather go to the dentist than work on their taxes.
Right.
And so what we want to do with today's show is to give people, a little motivation, give them some tips and some things to think about. And one of the things about taxes is that once you take advantage of what's out there, you can do things for yourself that make life a little better. So we're going to talk today, Tony. We're going to talk about some specific things for people in their 50s and 60s. Then we're going to talk about something for those people who are self-employed. And, there's a lot of things when you're self-employed that the tax code really helps with. And then we're going to just make sure we touch on some tax breaks that are just available to everybody. Because I think, Tony, like if you ever look at the IRS code, it is like a book like this thick. And I think it's definitely falls in that category of whoever knows the most rules wins.
More than 70,000 pages, the IRS tax code.
Because they never delete a rule, right? They just add another one on top.
Yeah, they amend and add more and complicate it more. It's unbelievable, really. And so you have to work with a financial advisor like yourself who's got the overall big picture alongside your CPA who's really looking back at the past year. So It's a combo platter. You need help with it. Why go it alone? And, I think it's a good time of year, obviously, to talk about this. And I know you have some good insights for our listeners today. And, with if you get the COVID vaccine, and you get your taxes filed, what could feel better than those things, right? And so hopefully we'll all be able to get those things taken care of here in the next few weeks or months. So what do you have for us? How do you want to start this?
Well, we're going to kick this off, Tony, like looking at people in their 50s and 60s. And I was, perusing around and I found a great article in U.S. News and World Report about tax breaks for people over 50. And so I think that's a lot of people who are listening to the show, because for a lot of us, once we hit our 50s and 60s, we start going, we need to really be paying attention to money. And especially when you actually start making money, taxes become a little more important. Because you remember when you were young and you filed that 1040 easy.
Yep, the 1040 easy, yeah.
It took you longer to get the form than it did to actually fill it out. But once you're in your 50s and 60s and actually have some money, then it starts to perk your ears up a little more and go, maybe I should take a look at that. And so it's really interesting is, once you turn 50, and especially when you hit 65, you can get a bigger standard deduction and you can potentially earn more before you even have to file a tax return. So when you're older than 50, you may be able to defer some taxes or avoid some of them altogether on the money that you're using for retirement and your health savings account. So these are the things, and this is why it's so important to have that tax preparer or CPA on your team, because the point of this show, Tony, is we're going to give you questions to ask. And then you can sit down with your tax preparer to say, okay, I heard that I could do X, Y, and Z. Does that apply to me, right? Because all of us are just a little bit different. So it's really great to have these questions. And then you go sit down and go, let's make sure I'm taking advantage of everything that I can take advantage of.
Yeah, and with the changes that happened not that long ago, you're either looking at one standard deduction or itemized deductions. And you talked about a bigger standard deduction. I like the sound of that. Tell us more about that.
Right, big deduction. That's always sounds really great. So there were some changes that were made, and there's always you can itemize, you can just do standard deductions. And what's interesting is as long as you don't itemize what you're deducting, you can a lot of times use that larger standard deduction if you and your spouse are 65 or older. So the current standard deduction for seniors is $1,650 more, $1,650 more than the deduction for people who are younger than 65 that file as an individual. Married couples, there's all these categories, right? You're single, you're married, you're all those things. Married couples can bump up their standard deduction by $1,300 if one spouse is at least 65 and $2,600 if both spouses are 65. So Tony, good news, getting older helps.
Well, that's interesting that you should mention that, actually, because just this past Wednesday, I got older. I don't feel now, Tara. I don't feel older. I don't
Happy
feel
birthday.
any older, which is good. Yeah. I had a birthday. March 3rd was my birthday, actually. So
happy birthday.
Yeah. And normally we don't talk about age, but I am double nickels. I'm double nickels now.
Congratulations.
55. Yeah. And people say, well, you don't seem like you could be that old. And I'm like, yeah, it's my immaturity. It throws people off.
Well, I was watching a commercial on TV for wrinkles and all the things you can do for wrinkles. And I just have decided, who said wrinkles are bad?
Yeah, there you go. I like
who
that.
Who said wrinkles are bad? Why do I think I'm taking that off my list of something I need to fix. I think wrinkles are fine.
Yeah. Well, I'm fortunate. I still have plenty up top as far as hair, but my kids are quick to point out, Dad, you've got some gray hairs coming up there.
It's always nice to have your kids tell you.
Oh, it's
keeping it real.
It's so good to have teenage daughters, Tara. I can't tell you how important that is in my life to have two teenage daughters right now to remind me of things. Remind me of what I shouldn't be eating, to lifestyle critiques, pointing out things about my receding hairline or the color of my hair. What would I possibly do, Tara, without that? I don't think I could live without it at this point.
I don't know, Tony.
But back to taxes. Okay, I digress. Sorry, I sidetracked us there for a minute. But what about a filing threshold? You had mentioned something earlier about a filing threshold. Tell us more about that.
Sure, Tony. So this is another one of these things. This is part of that education piece to take note so that you can ask these questions for your tax preparer and CPA is, for those people who are 65 and older and have a gross income of as much as $14,050 before they have to file a tax return before 2020. So that's $1,650 more than those younger workers. For married couples, the threshold is $27,500. So here's the thing, Tony, if both spouses are 65 or older, and it's $26,100 if at least one of the spouses is 65 or older. So basically what that means is you can earn all the way up to $26,000 if you're over 65 and before you have to start paying taxes. So it's kind of a good news deal. And especially, Tony, we talk a lot about managing your taxes. And one of the things I try to do with people when they're setting up their retirement is getting as much of their money from taxable money into tax-free money. Because if you have things like Roth and you have things like whole life insurance, or you have things like municipal bonds, you can be taking money in, but it's tax-free, right? So it doesn't mean if you're only making $26,000 that you're living a small life. It just means that your money can be organized in a very good way so that we are reducing that threshold of where you have to start paying taxes. So it's just really important to start understanding where these thresholds are. And Tony, this is one of the things I really like to sit down with clients when they're coming in and we do that review is to say, let's look at how you have your money structured, because you build this nest egg and people do a great job of doing their IRAs and their 401ks and putting it all together. But a key piece of that is trying to get all that money as tax-free as possible. So that way, as you get older, it's really nice when the money that you have in the bank, Tony, is actually your money and it's not a partnership. How do you say it? A partnership with Uncle Sam?
Yeah. You're a joint account.
Right.
So many retirement accounts, the traditional retirement accounts, the tax deferred accounts, that's a joint account with Uncle Sam. 30%, 20 to 30% of that's going to be his. So you're right in saying, hey, let's look for some tax-free possibilities out there where when you pull the money out in retirement when you need it, it doesn't put you in a higher tax bracket. And that's important too. Now, and I don't think, listening to you rattle off those numbers, Tara, I don't think I'm breaking any new ground here when I say tax planning can be very confusing. And I mean, there's so many rules and requirements. We mentioned the IRS codes earlier. So if you don't already, you want to work with a financial professional, someone like yourself, Tara, who, because you've have a wealth of experience, pun intended, and insights and insights when it comes to taxes. And you need someone like that who is looking at the big picture and your retirement funds, not just like a CPA looking back at last year, which is great. You have to work with a CPA, but you need to also, in conjunction, work with a financial professional, a planner, advisor like yourself. And so I think, don't take on the tax man alone is the bottom line, right?
Well, Tony, I life is hard enough. So I always
Yeah.
like to look for some life hacks. And to me, one of the life hacks is definitely working with the CPA, because I do. And, I know what I know, and I use my tax preparer as part of my team. My CPA is part of my team, because they are the ones that stay up to date on every single change every year. And so, Tony, that really brings us to this next thing that you really want to look into is, what are the deals with property taxes in your state and in your location? Because for people who are older than 65, there is some relief with property taxes at times. And so this is where I definitely would reach out to my CPA and say, I own this house, or I own this piece of property, and what are some of the tax reliefs that I can get? Because a lot of times, Tony, I find with people, there are things they can take advantage of, and they don't do it just because they don't know. And it's one of those things that the laws change a little bit. Like, I think the Biden administration is talking about some different tax changes, and we're starting to look at how that's going to change how your taxes go. So you always want to make sure you're keeping up with the best information to date. But one of the good things about property is there's a lot of times there's potentially some tax relief that you have there. So you want to make sure that you're checking into every avenue that's going to save you money. And that's kind of what we're talking about on today's show, Tony, is just to ask those good questions, because at the end of the day, it's really nice if you can go, whew, I got to hold on to a little bit more of my money because I made some better decisions.
Right. I think that's really important. And, we've been talking a lot about tax breaks for people who are 65 and older, but I know there are some potential tax strategies for people younger than that too, right?
There are, Tony, and this is why I love this topic, because there's a lot that you can do, because you've already made the money, right? So now we're just saying, now that you've already made the money, how do you take advantage and manage it the best? So this is a tip for those people who are just turning 50. Once you've turned 50, Tony, you can actually put an extra $1,000 into your IRA. So that makes a total of $7,000 in 2020. And additionally, someone who's in their 50s, who's in the 24% tax bracket, who makes out of an IRA, could save almost $1,680 in their current tax bill.
Wow.
So it's really important. And this gets into that question, Tony, I love, between the financial planners and the CPAs, right? Because the CPAs are trying to save you money today, and the financial planners are trying to save you money in retirement. So sometimes we butt heads a little bit about how to get that done.
Sure.
But depending on where you are in your situation, if you do a traditional IRA, that's a deduction that lowers the taxes you pay today. And then you can look at how we're going to fix that. So then when you get into retirement, we try to get that money into a tax-free bucket. So at the bottom line here, Tony, is once you've turned 50, you're allowed to put an extra $1,000 into your IRA. So take advantage of that if you're in a position to take advantage of that.
That's huge. And I know that 401k has a catch up at age 50, right? You can start putting more into your 401k then?
That's right. So, and this is a reality, right? And I love how they call it the catch up, right? Because you're young, and then you hit that period of life, right, where you have a new house and a car and a family. And so it becomes a little harder to donate money as you should between your retirement account. And all of a sudden you're like, oh, I'm 50, I need to catch up. So the IRS is aware of that. And they said, so once you're 50 or older, you can actually have additional money, almost $6,500 in your 401k. So that's more than the younger workers. And, the government is trying to help you out so you can play catch up. But remember, the government's also helping you out, because they also want to be able to earn those. They want you to make more money so that there's more money for them to tax later.
Yeah. And the taxes on those traditional 401ks aren't due until you begin taking withdrawals. Right. And the money has grown with compounding interest. So they let you do that, because then they get their money plus taxes on the interest when you take it out. And that's where Roth 401ks and Roth IRAs, and there's some cash value policies, insurance products out there that would allow you to withdraw some tax-free money as well. And it's all about a balance, as you mentioned earlier. Now, we should probably take a minute here Tara, to let our listeners know how they can set up a complimentary consultation with you to talk with you and Chris to talk about this and make sure they're on the right path and doing the right things, so they're not, they want to minimize that tax burden, especially when they get to retirement. They want to have it planned out before then.
Exactly, Tony. So I love that. So Tony, Chris and I really have set up with these radio shows 20 complimentary appointments for people listening to set an appointment with Chris and I if they want to talk about taxes, especially, and say, hey, am I doing everything right with my nest egg? Because I've been building, and now I want to make sure that I have gotten my money into as much of a tax-free situation as I can. So Tony, they can call the office at 719-210-4242 to set up that complimentary meeting where we can take a look and see if everything's on track. And they can also visit the website at www.taraenolan.com, and you can contact us through the website as well.
That's awesome. Now, we're going to move right ahead. And during that first segment, you focused on tax breaks for people in their 50s and 60s. So now I think it's time to shine a light on potential tax breaks for self-employed people out there. I know we have a lot of listeners and viewers out there who are self-employed, and obviously filing for taxes can be a real source of anxiety, especially for self-employed people, because there's something to be said for the rest of us who might work for a company that have that money automatically taken out of our paycheck. And so those taxes have been taken out, and that's a luxury that most self-employed people obviously don't have. So what are some options for these people when it comes to tax deductions?
Well, being a self-employed person, Tony, in this country, the tax code is actually really set up to help you out. Because if you're self-employed and you have your own business, there's a lot of rules, and it kind of changes the order of things. Like when you have a W-2 job, if you look at the top of that W-2, right, there's all the deductions that are taken out, and then you get paid what's left over. When you're self-employed, turn it on its head, is you get to deduct all your expenses, and then you pay taxes on what's left over. So you really want to make sure, as you're self-employed, this is where it really makes you money to be working with your financial planner and CPA to make sure that you're deducting everything you can. So when you're self-employed, your internet and phone bills can be a great place to start. So you may or may not be claiming your home office as a deduction, but you can claim those portions of your phone and your internet costs. And this is where you just want to talk with your CPA about how you can deduct those things, because you're already spending it and you're spending it for work. And when you're self-employed, the government has said you get to deduct your expenses. So why not?
Yeah, I think that's a really good point. And, obviously people have been working from home more. And so deductions like phone and internet from home, especially obviously for self-employed people, that's huge. So what do you have for us next?
Well, here's another great one, Tony, right, is health insurance. Because health insurance is, it's always up in the air in this country, right? Because we just are we making changes or what's happening? But for self-employed people, health insurance is something that you should really be aware of, because you can deduct the insurance premiums if you don't qualify to participate through your spouse's employer program. And you can deduct those health and dental and the qualified long-term care insurance premiums. So you want to make sure that's another case where you're paying for these things anyway. So make sure that if you're qualified, that you're getting those things deducted. And Tony, a lot of times you got to ask the question, because I found that a lot of tax preparers, they're very good, but they tend to be very introverted, focused people. And so sometimes I think it's funny that, and I love it. I have some friends who are CPAs, and they're like, we have this job because we don't want to talk to people. We just want to deal with paper. And so it's very important, Tony, that you have a quick conversation with your CPA and say, here's my list of questions of things that I feel like I could qualify for, and ask the question. Because sometimes, we're all human, right? And someone just may go, oh, I forgot about that. Or I didn't think about that for you. So you want to ask the question.
Yeah, for sure. And I mean, that makes sense. And obviously, once again, this highlights the need, if you're self-employed, to work with somebody like yourself. Now, one thing I'm always curious about is what a person can deduct when it comes to meals. And you had to know I'd ask about this, Tara. I mean, those trips to the pizza buffet, can I write those off? If I slip my business card to the guy when I order, is that a tax deductible situation?
Tony, this is a great question about meals, because in the tax code, this becomes a very gray area. So you can deduct meals when you're traveling for business, if you're at a business conference and you're entertaining clients. but it says, don't forget that it can't be overly extravagant, right? So that just leaves it wide open for interpretation.
Right.
And so you just want to, this is a case where you want to sit down with your CPA. And I love this. I've had this conversation with my CPA, and I've told my CPA, I want to deduct everything that I possibly can legally, right? Like I don't want to go over the line, but I'd like to kind of walk right up to the line. And so that's just that conversation you have with your CPA. And the conversation I've had, I love it, Tony, because he says, well, it's a little bit of a gray area. So we're very clear about how we do it. So if we ever had to sit down in an audit and have that conversation, we might lose that battle, and they'd say, well, no, we don't agree. And they may make you pay the difference. But as long as you're being very transparent about here's the rule, here's how I'm interpreting it, and here's how I do it, then you're okay. And so for business owners, this is a huge thing, right, Tony? Because you do a lot of meetings with clients, you take people out for coffee. So it's just part of your business expense. So make sure you're definitely taking advantage of that.
Yeah, I think that's huge. Obviously, you do want to take advantage of that, and that rule change where you can deduct 100% instead of 50%. That's an interesting one. That's a nice, if temporary, perk right now for self-employed people. So what do you have next for us, Tara?
Well, I think, Tony, the next critical one is travel. And, we haven't been traveling this past year, so it's a good time to be thinking about it and looking how you take advantage of that. But to simply put it, Tony, you qualify for a tax deduction with your business travel. And your business travel, it needs to be longer than one ordinary workday, and it must include sleep or rest outside of your area of where you live. And it's generally considered to be like that's outside of the city where you live. So if you're taking those business trips, then you get to deduct that. And that's a good thing, Tony, right? Because those business trips are expensive.
Yeah,
and
they can be.
Here's the thing, and this is a goodness here, though, is if you have a business trip, you need to have a specific purpose for that business trip before you leave. And during the trip, you need to engage in some kind of real business activity. So this is one of those areas like when you do real estate training. If you're a real estate investor and you want to go and you're thinking about investing, in another state or another location, you can travel to that area, check out the properties and take a look at it. And that's a business activity that you're doing on that trip, and you get to deduct that for the business trip. So, Tony, this is where you really want to sit down, no matter what your business is, whether you're, you run a beauty salon or you're a doctor. You have to take business trips every year, and you have to have meetings for your business trips. And so a lot of times you can combine, that idea that you have work over here and you have play over here. When you take those situations where you can combine work and play, and then you can deduct the taxes, I think that's a win.
Yeah,
and so
it is. Although Tara, handing out your business card during a friend's Las Vegas bachelorette or bachelor party, that doesn't count and make the trip tax deductible as a business expense.
That's a little questionable. You kind of want to think about it. If you had to sit there and explain it to your grandmother, would it pass the test?
Yeah, there you go. I like that one. That's the grandmother litmus test right there. Well, yeah, and it probably goes without saying, but if you do travel a lot for business, make sure you keep accurate records, right?
Yeah, keep your records and your receipts.
The Tony, IRS gets curious about those things.
It's all about transparency and being above board, doing what you're doing and just keeping a record of it. And as long as you're being very transparent and your intention is good, you'll be okay. It's just, you know, when you're trying to do something that's probably not right. So,
right.
But I encourage you want to know what is within the realm, because take advantage of what you're allowed to take advantage of. Yeah. And what I hate to see, Tony, is people missing out on opportunities that are there and available, and they just don't know.
Yeah.
And so that's what this show is all about today, is educating you so you have good questions to ask, and you don't have to do it by yourself.
There you go. And on that note, Tara, we're out of time. It just flew by. I couldn't believe it. I just looked at the time and wow, that flew by. But is there anything else you want to add before we go today?
Just, Tony, my foot stomp for the show today, as always, is when it comes to taxes, you can work with a CPA, you can deduct the cost of the CPA, talk with your financial planner, and get that help. It's your decision at the end of the day, but get as much of that advice as you can, because you want to maximize, you're doing the work, so you want to maximize what's available to you to set you up for success. So we covered a lot, Tony, but if someone has a question today and they want to sit down and look at it, please give Chris and I a call at 719-210-4242. This is the stuff Chris and I love to do, is to take what you're doing already and make sure you're maximizing it.
That sounds
this
great.
Is perfect opportunity.
That's awesome. Well, Tara, great show today. And listeners, that does it for today's episode of Nolan Financial Radio with our host, Tara Nolan.
Join us soon for another episode of Nolan Financial Radio. Take care, and we'll talk with you next time.
Excellent.